so welcome everyone. My name is Jackie from Sparrowly Group, and before we begin, I'd just like to start by acknowledging the traditional owners of the various lands on which we all meet and elders past, present and emerging who may be attending today. So Sparrowly Group are pleased to be collaborating with chartered accounting firm Bacchus Advisory for a webinar specifically for farmers who are looking to or have diversified into agritourism. We work with farmers across the country and industry around the areas of agriculture diversification and value adding. So through this work, we know that one key challenge specific to agritourism are the challenges surrounding taxation and financial management in diversification. So today, to further support our farmers and industry, we have invited Bacchus Advisory to provide an information session to help you on your journey. So we are recording this session and we'll share our contact details at the end. If you would like access to the recording, please reach out. So I'm pleased to introduce Lisa Milletta from Bacchus Advisory. Lisa is an associate director with more than 20 years experience as an accounting professional. She works with clients to provide customized accounting, tax and strategic business advice. Bacchus Advisory is a boutique firm where they use their extensive chartered accounting and specialist tax experience to make life easier for clients by providing clear and concise advice on complete tax matters and business management. So it's great that we have Lisa joining us today so that we can learn from her expertise. So I'll hand over to Lisa now. Thank you.
Thanks, Jackie. Hi, everyone. Thanks for coming. Today, we are here to cover, just to navigate the numbers if you want to diversify into agritourism. So I think today's session, we're going to cover a few things. So one is, what is primary production and how agritourism may change your business, what the tax concessions are for primary producers. We're going to specifically talk about the New South Wales planning, the changes that they're doing. And while we're going to focus on New South Wales, if your states are going down that line as well, you potentially could look at the initiatives there, but we're going to take a bit more of a holistic approach on that. Some considerations you'd need as a primary production business, and then just some practical tips to help you along the way. So the impacts of the impacts on primary production for these new rules. So I just wanted to let you know that we're talking about two different governments here. So with New South Wales planning and their changes, that's actually talking about state changes. And primary production for tax is actually at a federal level. So that's a countrywide level. So unfortunately, these two taxing agencies don't actually agree with their definition of primary production. So if we want to talk about primary production, I'm going to actually talk about it from the ATO's point of view. So the ATO defines primary production as a business of, is when you're in the business of plant or animal cultivation, which includes domestic animal breeding, fishing or pearling, tree farming or felling. So that is in a nutshell. So one I know example is the ATO would consider something like horse adjustment as primary production, while I know the New South Wales state government does not. So that is where the two don't align. So you've got to be really, really, you've got to be quite considerate of what you're doing and probably really liaise and work with your tax agent to make sure you're not doing something for a state government, but you're going to have consequences with the tax department later on. What won't meet the definition of primary production is leasing and a cafe. So this is specifically to do with these rules, the planning changes with New South Wales. So things like a rural experience or camping, that's leasing because you're going to actually rent out a part of your property. And if you ran a little, what they call a small farm gate experience, like a cafe, if you do that, then that may not also come under the rules of primary production. So we've just got to be really careful of that. So at an overall level, the tax concessions at the ATO give the tax concession and special rules that primary producers have access to is for tax concessions, it's the valuation of our stock, special rules for depreciating assets. So we're talking about actually primary production assets. So things like that are, when you talk about depreciating, things like water facilities, fencing, fodder storage assets, horticultural plants, grapevines, they all actually have different rules for depreciation, which are more favourable to the primary producer. So the one I've actually worked with before is a fodder shed. Fodder sheds can actually be depreciated over 3 years, as opposed to a normal building, which when we build a structure could be up to 25 years. So there are special rules there. So you need to just be aware of those. And you've also got your deductions and offsets for capital expenditure. So I think the ATO is more favourable to primary producers when it comes along, like things like electricity and phone line connections, land care, and just preparing the property in the event of a fire. So and the prevention of that. In terms of special rules, primary producers, based on what you can do, have different rules around GST and PAYG instalments. And the biggest one is you actually get to pay it twice a year if you meet the criteria and you fall under the rules. So instead of having to do quarterly BASs and quarterly PAYG instalments, you actually get to do it twice a year. So it means in a seasonal business, you know what the instalment's going to look like. You can start putting money aside, so the cash flow burden is not as difficult. So they're the main tax concessions and special rules that you receive at a federal level. So we want to make sure when you go down the agritourism path, you don't lose access to these concessions. So the New South Wales state government, these are the planning activities that they're bringing into play. So it's camping, fast track of new buildings, the rural experience, the small farm gate experience, and the roadside store. So when we talk about these, this is the opportunity for the business to make more money through diversifying what it does. The fast track new buildings, this one is, I believe, you're not required to have as much, you don't need as much, I think, DA approvals and things like this just to get the building up, but it is the criteria with this one is as long as it is a new structure to sell the produce from your farm, then you can get fast track approvals. Now, this fast track building, that would be fine for a primary producer. I have no concern about that because you are just building a building or structure to then sell the products that you are creating on the farm. So that's fine. In terms of the rural experience, that's using pre-existing structures, and they can be used for things such as tours, weddings, and conferences. Now, using the existing structure, that's fine, but once you start renting it out for tours and weddings and conferences, you move into what we call the leasing space. That is non-primary production. So at that point, even if you use, let's just say it's a big barn and you use it most of the time for your animals, but then you clear it out for a wedding, that portion of the time it would be for the wedding would be actually deemed non-primary production, and so you won't get the concessions on that part of your income. Things like camping is very similar to the rural experience. It's going to be about leasing. You're leasing out a part of your land so someone can camp on there. So with that one, I'd probably say that's outside of the primary production rules. The roadside stall, it's to set up a stall and you can do it. It's a small stall you don't need council approval for that or building approval, as long as you meet certain standards. And then at that point you sell your produce. I would absolutely agree that that's primary production. I probably wouldn't have a concern with that one. The small farm gate experience, when we looked at that one, it was about using the existing buildings on your farm to set up a business such as a store or cafe for tasting or workshops to highlight your produce. Now, if you're using it as, I think if you're using it as a store, you're probably okay to say it's a primary production business because it's the sale of that. Where it's a cafe, it might be different because you're actually having to change. It's just not getting the produce off the farm and selling it to a customer, that there'll be like the service behind it with the wait staff and things. So the rules are really intricate. So I'd always recommend you speak to your tax advisor before you go down the path, or if you have, about how to structure it, and in terms of just what you need to do internally to make sure that you have covered yourself off, because the last thing we want is for our primary producers to lose their favourable tax concessions. Other considerations that you need to take into consideration are too, and I've actually got a state one here, is land tax is actually a state tax. And so, as I said, while the federal government may see your farming operations as primary production, if the Office of State Revenue does not or your local government or your state governments don't see it as primary production, you may then get, you may be subject to land tax, which based on each state, it varies. So you just want to be careful with that. In terms of the federal government and the ATO, when you've got primary production income, you've got your rules there. But once you've got no non-primary production income, which is the income from not your farming, essentially what you're looking at there is that you may then get limited access to the tax concessions, or you may lose some things along the way. So one of the main ones I'm talking about is, and not a great scenario, but sometimes you don't have a great year and you make a loss in that year and you're allowed to claim your tax losses. Now, but if you can't, you got to carry it forward. Those tax losses get quarantined to your farming. So then if you're making a loss of income through your rentals, like say your farm stays, but you're making a loss, otherwise you might not be able to access the two. So you just want to be really cautious of how it is set up. Practical tips. So for me, the practical tips are with any business. If you decide to go down the agritourism path, I think you just need to, one, talk to your tax agent. Always talk to them because they'll help you set it up. But always be able to identify what your income is. Is it from the farm or is it from these new planning like incentives? So basically, if it's from a rural experience and you've rented out your property for a weekend for a wedding, that's great. Just make it really easily identifiable. And then also look at how you're splitting your costs. So like if you've had to hire in caterers to do a wedding, well, that will be associated with the wedding, with that rural experience. So you'd put it like, just have a separate area either in your accounting system, whether it be Excel or Xero, just easily make it easily identifiable. So then you know what each business kind of stream is doing. Lots of people use different accounting softwares. Now, one of my clients runs a farm and he likes a spreadsheet. So I live off spreadsheets for him. So he gives me his profit and loss, and they do their own internal bookkeeping, and they have their own categories. And one will say rentals from farmhouse, and the other one will say agistment and cattle sales, and we'll do it. And then I just grab a spreadsheet and I just go, this is from his primary production, this is from his rentals, and I split the cost. Then I have a chat with him every year and always have a think about it. I go, your electricity, you pay for the whole farm. What's your split between your farming and your rental? And then he'll go, oh, it's about 80% to the farm and 20% to the rental. And then that's how we work together. So he looks at it every year and we have quite open conversations about how to split it. We run that all off a spreadsheet. If you use things like MYOB or Xero, you can set up different charts of accounts, or in some of the programs, you can actually just add a tracking category to it, which means you can just run separate like profit and loss statements. But if you need any assistance with that, I'm pretty sure your tax agent can help you with that. And if you just want a quick call to see if you're using Xero, so like I use Xero quite a lot, but if you want little quick tips on how to use Xero, I can just reach out to Jackie and the Sparrowly team, and I can probably create a little quick cheat sheet for you guys if you're using Xero and how to add a tracking category into Xero. So you can just literally, it's just a little label. You'll do your invoice and you'd say it's a sale, and you just add an invoice to say agritourism as opposed to your farming. I think the other thing is, yeah, I don't think you should hold back on doing it. I just think have a really open conversation going with your tax agent. I don't think we should hold back on any business ideas. I think we should all go and try and do as much as we can with our business. But I'd just say, just don't talk to your tax agent 18 months after the event, because we can't actually come in and help you. So maybe just a few phone calls along the way, like if you're doing it through this current year and you only speak to your tax advisor in December, there's nothing much they can really do to help you for the current year. So just have a chat with them, and like we're getting close to the end of financial year, so now's a really good time to call your tax agent anyway and just get some tips on how to do your tax planning for the end of the financial year in any case, and they can help you with all this as well.
Great, thanks, Lisa. I haven't seen any questions come through in the chat, but if you do have any, please add them in. We did have some at the start. So one question, Lisa, is it better to finance the entire initial agritourism enterprise or finance it in smaller stages?
That would be a more of a personal decision and a business decision. If you do need funding for the full build, and I'm just going to assume you're building a new building, and you need full funding, I would probably say yes, it's fine. As long as I wouldn't pull out the whole amount. Do use a drawdown facility so you can draw down as you need it. But at that point, if you are financing, remember all of that interest is deductible to you as a business, so you get to claim that as a tax deduction. So make sure you capture all that. So I would actually say though, if you're going to sometimes people take out the financing against their home loan, I would actually advise maybe just try and get your bank to set up a separate financing facility, because you just want to make sure you can quarantine that interest. You still have to repay it, yes, but if you quarantine it, it makes jobs of tax agents a lot easier, but all that interest would be absolutely deductible. But yeah, I'm not sure about how I know within the farming sector, it's a bit different with how you obtain financing. So just have a chat. But if it's easier to get it all in one go with a drawdown facility, so you don't have to pull it all out at once, it's probably a good idea, because at least you know you've got the money for the rainy day.
Great, thank you. And another question is, how do I determine timing on when to expand operations to include agritourism? You kind of touched on this around when those milestone checkpoints are with a accountant, but yeah, what's the timing recommendations?
I think that's once again really personal. It's when you're really ready to take the plunge and see how it goes. In the climate that we've got at the moment, usually people are a bit more comfortable when there's a bit of excess cash surplus. So you just know you can diversify out and you're not going to have to pull out of the family budget, which is always a nice thing to do. So I think in times of doing it, I probably wouldn't, from a tax professional's point of view, I probably wouldn't want you doing it in the last week of the financial year and calling me after the event going, oh, how do I fix this? Like, because we can't help you. So I would say if you want to kick it off this side of 30 June, probably give your tax advisor a quick little call at some point and just go right ahead, start it. It doesn't matter if you start it today and you call them in a month's time, but I think just make sure in the inception phase you kind of have a bit of a chat with your tax advisor. You know, even if you have a rough drawing and you just send them the drawing. Like, I've had people send me drawings and I just go on the phone going, explain to me what you're planning on doing. They're like this. I'm like, yep, it's good. And then I go, that's probably going to take you to 3 months. Call me in 3 months' time and we'll go from here. And we give the first initial steps for the first few months. So we can actually work with you. Like, you don't have to sit and have hour-long meetings with your tax advisor. Like, I know only certain people like me like tax. Everyone else just doesn't really like it. So please don't feel like you need to have multiple meetings with your tax advisor. A quick phone call might actually get the ball rolling for you.
Great, thank you. Just a couple more. Do you have any tips on how to help determine which type of agritourism venture would be best to start and considering?
If you if I look at the 5 that the New South Wales planning have, the one that would probably require the least amount of effort, and I'm not a primary producer, would probably be your camping, just because what you're just doing is you just have to make sure a block of land is cleared, and it's right for people to use. That's actually probably the one with the least amount of effort required. So that would probably be your good one. Now, if a part of your ideas for your own business is to start selling your produce and not at like a market but on the site, you'd probably want to look at then your road, like your roadside stall would be I believe that might be quite fast to build. So you might want to look at that one. So, and then, if you can get your camping underway and you kind of got that drill down pat, then going into your rural experience probably won't actually make as much difference. Like, it probably won't be such a big leap of faith because you already know how to run the camping. So if I look at the 5 that they've got, I'd probably go like camping would probably be your baseline, and like the roadside stall, because your roadside stall, if you do it really well, you can do the cafe and the store afterwards, the bigger one, which is your farm gate experience. And then if you can do your camping, then your rural experience where you get your property ready to rent out, then like you've already taken the first leap of faith. But I do think your camping's probably the one to do for if you're going to have a go in this space, do that one. Now, don't forget, if you do it for 3 months and then you just give up, it's fine. Like, no one's going to hold anything against you. But also at that point, I don't think the ATO could really turn around and go, well, you're all non-primary production because you've only had a small little go at it. So I think that's also a good way to look at it.
Yeah, and we hear that a lot, and we see that accommodation is generally the place where most primary producers start with and just grow and test and learn from that. Just another question. There was a comment around how to understand council rules or feelings in regards to tourism. I might just quickly take that first, Lisa, and then add to it if you have anything else. It's really important just to touch base with council and explore the website around what strategies and plans exist. Most councils would have a tourism strategy, otherwise an economic development and tourism strategy, and you can really clearly see where tourism fits in there and if agritourism fits in there as well. So you'd be able to get a very good sense around the interest and appetite for tourism in a region. And then secondly, with that is understanding the planning reforms and talking with the planning team at councils as well before you get to invested and start in agritourism. And we do have a question in the chat. Do you know if Victoria has a similar program as New South Wales?
I'm not sure about that. I do know from a very quick search that I know that the Victorian government is moving to to support the agricultural space up, and the plan is up until 2030. So potentially there'll be some, if the reforms haven't been announced yet, they'll be coming out quite shortly. Because if they want to plan for 2030, we've got 6 years left, so they'd have to have it in place shortly. But Jackie, have you heard anything about Victoria?
Not so much from from the planning perspective. Yeah, I know that agritourism supported through the planning scheme in Victoria around any concessions, like the tax implications. I'm not as across that, but yeah, it's best to probably talk to your local council and then your accountant if you are based in Victoria as well. Not sure if there's any other questions. We'll keep going, but add anything else into the chat. But then, of course, you've got Sparrowly Group's details as well as Lisa's. If you did have any other questions, happy to jump on a call, go through anything from today or any other questions that you might have as well. But thank you very much for your time today, Lisa. Thanks for joining everyone. So enjoy the rest of your day. Thank you.
Thank you. Bye.